Let's grab this opportunity to learn from our panelists. Over to you, please, Professor Wong.
Thank you. Good afternoon. We just passed noon time. Fred just said there's no challenges. I'm telling you, I have a big challenge to run a session right before the lunch. Okay. This morning, we had two very insightful sessions. One of the risk priorities for regulators, Supervisory, and the second, we have boosting Hong Kong's headquarter economy. This session will put our discussion more in the field, right? About the business, about how you get your business. This is the topic, insurance solution in wealth management. Just now, in the earlier panel, Alpha has stole my notes about Hong Kong is set to overtake Switzerland as the biggest offshore wealth management center, and also our insurance priority, our position as #1 in insurance penetration. So thanks, Alpha, for stealing my notes. So this session will talk about Hong Kong being a wealth management center, a region's insurance hub. How can we put the two together? And how would our industry, insurance, add value to the wealthy clients and what their needs? I don't need to introduce each of them, but just have a quick note. Andrew, I would take Andrew as representing the wealthy families. We're talking in the voice of asset owners and wealthy people. Ed and Philip will talk about voice about insurance solutions, insurance industry, and I know both HSBC and Manulife have very, very strong wealth management platform as well. And further to my left, CG came represent the wealth management industry of a big insurance group. So we have a different perspective of speakers on the platform to talk about insurance solutions in wealth management industry and how we cross over for Hong Kong as an IFC, bridging together the wealth and the insurance. So before I invite the panelists to talk about challenges, opportunities, let's do a live poll. I mean, I just like to listen to all of your voice about what do wealthy people concern most, or what is one thing that makes them wake up every night. So there are 4 priorities. So which one do you think is the top of their list? Okay? Okay, here it is. You can only pick one. So I think we have a majority vote. This is the wealth ladder, creating wealth, protecting wealth, growing wealth, and transferring wealth. So obviously, we have a big majority. Over half of our audience say this is at the top of their worrying list, things that they can't sleep well. So now I'm opening the question to our panelists with what our audience tell us. So wealthy people, the biggest concern, yes, they need to make money, they need to protect wealth, they need to grow wealth, but the thing that they can't sleep well is really how do I pass on the wealth either through succession or through transfer. So now this topic about bringing together the wealth industry and the insurance industry. Maybe I just open the floor. First question. How do you see the landscape of the wealth and the insurance industry and putting this together for Hong Kong? I'll ask someone opposite our table, right? Our clients, the wealthy people. So Andrew, how do you think the industry or the Hong Kong is developing in these 2 areas?
I'm not a rich people.
But you work for
rich people.
Andrew is a CIO of a family office.
So actually, I'm not a developer today.
Yes.
I act on our family office as a chief strategic officer. So I think it's true that succession, transfer of wealth, and protecting wealth are the major topic nowadays, because Hong Kong, probably the wealthy family is entering 3rd or 4th generations. So succession and wealth protecting is very important. And of course, with the rise of mainland, more and more mainland families are now 2nd generation. More wealthy families are 2nd generation. So it's natural that these 2 topics are the focus. And also, actually, that's why Hong Kong is, maybe we can overtake Switzerland in some day, because Hong Kong has the best combination of products, including insurance, investment, And to me, Hong Kong has some most friendly regulatory framework. Clement is very friendly, but actually all our regulators are very friendly, and I find that for the last, because actually this new family office is only established 6 months ago. So we go through some regulatory issues, we look at insurance, we look at investments, and I would like to say Hong Kong has a very good, we do not have a super regulator, but we have very friendly problem-solving approach regulators, including the SFC, the Insurance Authority, and as well as the super collector, FSTB.
Yes.
So I find all the regulators are very friendly. I think that's for cross products, it's very important. And also, I think that there's a very different approach in managing wealth and succession in family office and high net worth individuals. High net worth individuals probably take insurance as an asset, as an investment combination with insurance, whereas family office, we will look at a more professional approach. We will look at insurance as more as a protection. So as Mr. Fema just said, I think insurance agents are more important to high-level individuals. But for our family office, professional advisors like a total package from the private banker, they can provide us insurance, investment, and succession plan and trust service. And Hong Kong actually has all these services combined together like, wow. So it's very a very competitive approach we see. And also we have very good consultant groups like the big insurance brokers group, as well as I think the audit firms are now moving into consulting industry. So actually for us, the insurance is part of, for family office, insurance is a part of protection more than, and succession, more than wealth investment. But for high net worth individuals, I think so. Well, actually, Hong Kong, compared to other places, we try to look at to establish offices in other locations for our family office. We look at Hong Kong. Hong Kong really have a most comprehensive approach. Sure. Thank you.
Thank you, Andrew. I'll come back to you on whether they give you the correct, right services. Looks like right now he's very happy, right? So I'll come to the, both Ed and Philip on HSBC, on Manulife. How to look at Hong Kong's evolving or building, consolidating the two industries, combining all the benefits of it.
Yeah, thank you, Anna. And I go back to Stephen's introductory remarks, right? And Hong Kong has, I think, the highest life insurance penetration in the world, the second highest insurance density in the world. That has happened because insurance has evolved beyond the natural confines of its preordained sector to become a genuine wealth management solution. And I think its success in Hong Kong and frankly across Asia has been that these solutions have become so malleable and flexible that they can very adequately solve for all of these needs that you have on your pole. And certainly at HSBC, and I don't think we're unique in this, I mean, we're very bullish on this sector, on this industry, and on this market, because we see significant tailwinds, frankly, driving all of these needs. So protecting wealth, the foundations of insurance, we offer a guarantee, we offer protection, we offer assurance. In a world where political risk is rising, in a world where uncertainty is rising, in a world where you have deflationary pressures, frankly, in some of our core markets, in a world where you've got risk premia, which is inaccessibly high on alternative asset classes, then the value of wealth protection has spiked. And this is a counter-cyclical industry, and frankly, as volatility increases, demand for our products also rises. If we look at growing wealth, and I think this is a real Asian phenomenon, what we are seeing now, and Hong Kong is a great example if you see the growth in savings plans in this market, is insurance companies taking their institutional asset management and strategic asset allocation capability and retailizing it and giving customers access then to long-term smooth savings plans that benefit from very professional and very deep access to asset classes that, frankly, retail investors wouldn't be able to access otherwise, including private bank investors. I mean, our business in Hong Kong manages over $100 billion of assets within our insurance company. 25 billion of that is private assets. So the participations we get, we're able to translate that then to retail customers. And then thirdly, of course, as your poll pointed out, I mean, wealth transfer and succession planning is now a tidal wave of demand as this first generation of private wealth across emerging Asia reaches a certain age and starts to do estate planning and asset division. And insurance, the ability to pay forward your estate, the divisibility of a policy with named beneficiaries, the privacy, the liquidity that it offers, means that this is a very, very valuable and I think very, very high value solution for wealth transfer. So I think, on that basis, we're driving all of these and working with people like Andrew and his clients to make sure that our solutions do meet these needs.
Philip?
Well, firstly, Anna, thank you for having me on your panel, and Stephen Clement for the invitation to join you today. And in particular, the green branding makes me feel very much at home as a representative of Manulife.
Yes,
So
you're right.
you. And that's the second year running, because I remember Stephen's bamboo theme and the bamboo tie last year. But Anna, to get to your question, I think in the last panel, it was actually very good to hear that Hong Kong is such a leading financial center and wealth management center. And I do believe that's very relevant to our industry. And I won't repeat any of those points, but if we think for a moment about customer needs, because we're ultimately here, our purpose is about solving the problems, financial, wealth management, wealth transfer problems that our customers have. That's our purpose. And if we think about those needs across all customer segments, those needs exist. There are protection gaps, there are retirement gaps, there are unforeseen health events. But then when we think specifically to your question about high net worth and ultra high net worth individuals, there's that additional level of complexity, which is generational wealth transfer. And so when you think about all of those needs, some of them are protection, some of them are wealth management, and we've got this wealth transfer aspect. Insurance as an asset class, as a component of a portfolio, actually becomes very relevant. And one of the unique things about insurance is that there is a whole spectrum of risk versus savings. And depending upon what the individual needs of a particular customer are, the insurance policy can be customized to solve those problems. And you take that one step further, when you're young, you don't actually know what it is that will happen for the rest of your life. I mean, I remember when I bought my first insurance policy, it was actually in the year 2000, my first life insurance policy, and I bought it because I was buying my first home in London, and I didn't want my parents, if anything happened to me, I did not want my parents to be left with the mortgage, the debt. So I bought a term life insurance policy to be able to cover the mortgage in the event that I died. But I didn't know at that time that just a few years later I would move to Hong Kong, I would get married, I'd have a child, and then a few years later I'd have another child. And actually that first insurance policy that I bought was very static. It didn't really help me for the rest of my life. I still hold it, still pay the premiums. But what I've done over the years is actually upgrade insurance and buy insurance that becomes more relevant. And if I look now at what we sell to our customers and what I have bought very recently, is that, and this touches on Ed's point as well, that I can buy an insurance policy that doesn't just fulfill the needs that I have, but it will cross generations. So my children can inherit the policy. And because I have two children, the policy can split into two components. And actually, if my children decide to move to mainland China or to Canada or the US or Australia, the currency denomination of the policy can change. from Hong Kong dollars to US dollars to Canadian dollars. You can do that once per year with this type of whole life policy. And for me as a parent, that's actually very comforting, because the last thing I think any of us want to do is when we pass away, and one inevitability of life is that we will all ultimately die, and that's very morbid, but it's true. We don't want to become a burden on our family. And so leaving an asset class that transfers across generations without creating a tax burden and without creating stress of, gosh, what do I do with this lump sum of cash? I think that's incredibly unique, and I would advocate for insurance to actually have a much greater place in portfolio allocation of wealth management.
Sure. Thank you, Philip. Maybe I will just continue what you say into a question to CG. Okay. CG, it works in the wealth management division of a big insurance group, and I know you manage a lot of assets for your clients. Yeah. So I'm just follow up on Philip's comment about, Philip mentioned a few times about asset class, insurance as asset class, insurance as a component of portfolio. Do you see that happening from what your client tells you, or are you advocating that to your clients?
Sure. Thanks, Anna. Good afternoon. In case you're still wondering what I do, I think you can tell by the seating and the order we speak that they are my clients, and I provide services to them. I'm managing, we are managing mostly insurance assets. And back to Anna's question, I think it's increasingly aware that, accepted by the market that insurance is a separate asset class. There's still some level of, controversy in the market, but I think it's generally accepted now. It's quite a complex issue, but simply put, I think there are two main reasons. One is, insurance is not merely investment. It's also, it combines investment, protection, and in many cases, tax, optimization. Well, it depends on the jurisdiction you live in. And secondly, insurance has quite a unique risk and return profile. For example, life insurance has very long, ultra long, duration and low liquidity. Well, some products does embed some partial liquidity, but generally it's still like a low liquidity assets. And return-wise, it's not like any single asset class like equity, fixed income, or private markets. It's more like a hybrid of equity, fixed income, private markets. So it's more stable, lower volatility, and quite a low correlation to the traditional financial markets assets. That's why I think it's quite clear, and it's also supported by academic and professional research that is now a very separate and quite a unique asset class now. That's why we always advise our clients, high net worth individuals, to include insurance in their asset allocation.
Sure, thank you. Then I will have a follow-up question for Ed. Again, follow up what Philip talked about. Philip mentioned about some products, whole life, and then you split the beneficiary to different siblings, sons, kids. Can Ed build on that and share with us? We look at the needs of our client, protecting wealth and transferring wealth, succession of wealth. Share with us a typical product or typical solution that you provide to the client, and what does that solution meet the client's needs?
Yeah, thanks, and I'll probably cop out of the question because there is no typical solution. We offer a range of different insurance structures around the world. What I would say, and forgive me, Clement, and please do invite me next year, but there is significant innovation happening in the product space in high net worth solutions. It's not happening in Hong Kong. Okay? It's happening in the US. To a certain extent, it's happening in Bermuda. It's definitely happening in Singapore. So in Singapore, for example, if you look at the growth of the indexed universal life product, which has been very, very attractive at accumulating and hoarding money from high net worth individuals, particularly across ASEAN, but also in the Middle East, because frankly, it is a better value solution that risk shares between the customer and between the insurer. If you look at the variable universal life product or the PPLI product, you know, in our Singapore business, we were able to take $100 million of insurance with no premium because customers are pledging alternative assets. And when you get into the high net worth space, obviously that liquidity call is very, very important. So there's a lot of product innovation. It's not happening in Hong Kong yet. I mean, I will applaud both the IA and the SFC as I think we go into next year. There are very clear and concerted efforts to reduce some of that regulatory friction in this market, because I do think these products in Hong Kong will be extremely attractive and very, very welcomed by advisors in this market. I mean, just two maybe other things I'd call out. Firstly, the big innovation or the big growth in Hong Kong has actually been in capacity. The size of the demand is getting bigger. The size of the policies are getting bigger. Frankly, the insurable risks and the estates of our customers are getting bigger. So earlier this year, we hit the news. We issued a Guinness World Record, $250 million US dollar policy, the largest policy ever. I'll try not to digress too much, but it's quite an interesting story because the man from Guinness World Records came to see us and gave us our certificate. And he said he was very proud as a Hong Konger.
That's on newspaper.
Yeah, but he was a Hong Kong guy from Guinness World Records. He said, I'm very proud because the last world record in Hong Kong was for Ocean Park for the most amount of paper made out of panda feces. So, you know, on the one hand, it's great to have another. I don't know whether our certificate is made out of panda feces. But anyway, I digress. Those types of risks can, in my view, can only be written in Hong Kong because the balance sheets are bigger. The access to capital markets is bigger. The reinsurance capacity is bigger. Frankly, the advice, whether you look at the private banks, the FOs, the asset managers, EAMs across this market, is bigger and broader. So as you go up the food chain, I think you are going to see increasingly Hong Kong's right to win in writing these big risks and solving for the ultra high net worth demand across Asia and across the region.
Thank you, Ed. Before I go back to the policy, what can we do better? Let me go to the customer first. I mean, we are always customer-driven, customer-centric. If the customer needs it, the regulators will take a look into it. So I'll just ask the customer, I mean, is that something that interests you on what Ed said is available in Singapore? Obviously, I don't know the details, but possibly you know better than me, Andrew. A lot of people have been selling to you. So do you think there's a need of these highly innovative or highly structured products meeting what the wealthy individuals need?
I think customers are always looking at more choices.
Okay.
But actually, from my point of view, is Hong Kong have a very comprehensive choices already. For example, we do have variable life, and we have privately placed insurance policies that actually can create a wrap-up for if you want to mix bag of insurance and investment together. So I think it's okay. And also I think Hong Kong has a very strong, both the insurance agents or the private banker like yourself in the past, that we have a very strong know your client culture, which is more important than anything else. I think before selling to us, then you have a very strong know your client culture in Hong Kong. The regulators has been very strict on know your client, and so I think this culture is very good actually. So to me, both the family office or as my boss says, as an high net worth individuals, I think the product range is very good already. And more important is I feel most of the insurance agent or the private bankers come to us. They already take a lot of homework. They know what we need and what we want. So I think this culture of Hong Kong is quite unique. And also with international big insurance company and of course a very big bank assurance bankers here, they know us more sometimes because they are also bankers to us. So I think Hong Kong actually is very comprehensive, and also I'm very happy to see for the last 2 years, mainland insurers are coming up with more solutions. As in Hong Kong, although Hong Kong have very good, quite a number of wealthy families, but Chinese wealth, mainland wealth are coming up. So I see more mainland insurance companies now are giving up in more aspects. You have more competitors, but it's good for us. And of course, Hong Kong has a very transparent and very friendly tax regime, which is very important for us. I think we will like to see more products, but actually I think product-wise it's very comprehensive. I just mentioned those how high level of individual products, but as a family office, for example, if I want to have an actuarial studies of our liability for succession and protection, or you have all these insurance brokers having consultancy, or the big fours are very eager to offer the actuarial service to us too. And also, if I have invest in a startup, I can buy an IP insurance in Hong Kong very easily. I think Hong Kong is very competitive from product in terms of products. Thank you.
Thank you. Our customers are very satisfactory. The industry needs regulated to do a bit more. So can Philip say, from what Ed mentioned, what do you think the regulator can and should do more within the supervisory regime?
Well, I actually think we have a very open regulatory environment here in Hong Kong. And in the last panel, we talked about one of the strengths of Hong Kong being the quality and internationally respected regulatory environment. And I absolutely believe that I fully support that. And one thing Ed touched on in the context of regulation was, within the construct of a Hong Kong capital regime, is it possible to develop certain types of products? I think it's important to recognize alongside that it is possible for Hong Kong people, as well as visitors to Hong Kong, to buy offshore products in this jurisdiction. And not all jurisdictions allow that. So I think there are multiple ways of solving customer problems. But to CG's point, CG raised some really important points on some of the challenges that can exist. And one challenge that you talked about was how long-term insurance is. And a lot of things can happen in people's lives over the long term. And another challenge you highlighted was, look, insurance may not be very liquid, and sometimes people need to access liquidity. And I think this is what we are here for as an industry, to think not just about what had been done in the past in insurance, but how can we innovate to solve those problems within the product constraints or the product portfolio that exists in this market and other markets in the world. You asked, Anna, in your question to Ed, can you get into some products and give examples of how you solve this? So, just thinking about the whole life sort of category of products in Hong Kong, it is now possible, and Genesis is a Manulife example, Manulife or Manu Global Saver, that's another example. These are examples of whole life policies that you can actually, these are long-term policies that can go beyond your lifetime, pass on to your children, that you can cope with many of the changes that may happen in life. You move to another jurisdiction, you keep the policy, swap the currency to a new currency. There's a change in your family structure, you can add another beneficiary. That's pretty basic stuff. But beyond that, if you have a critical illness event, you can withdraw some capital from the policy cash value that then allows you to deal with that critical illness event, pay for some medical care to help make you better. If you have a need, your circumstances change, you may find yourself out of a job, you have a need for regular income. You can then draw upon some of the benefit features to provide a regular income rather than accumulate as a death benefit. So I think there's a lot of flexibility emerging in products. And I would actually say that Hong Kong is one of the jurisdictions where I see the greatest product innovation. The two in Asia where I see the greatest product innovation are Hong Kong and Singapore.
Thank you. Thank you. CG, I would like to bring Andrew's question to you. Andrew just now commented a lot of mainland insurance company competing with them. And then Andrew have a lot of credit for the mainland insurers coming. Can you just share with us the mainland insurers, since where you're coming from, And where do you see Hong Kong being this, what I mentioned, is wealth and insurance hub?
Okay. Well, I'm on the asset management side, but my group does have 2 insurance companies in Hong Kong, one property and casualty, and one life. The life insurance companies has been here only 3 years. And what I've been told, okay, back in mainland China, the competition among the insurance companies is fierce. But my colleague at the life insurance company told me that here is even worse. Because they are competing not against the Chinese competitors, but also the international big ones, right? The internet multinational companies. So I think they are under a lot of pressure to, as my fellow panelists said, to innovate, not to just copy what we did, what we do back in mainland, but also have to adapt and innovate. That's probably the key to survive here, not just basically like to survive first. But also, I mean, from my asset manager perspective, what I see is the demand is not only from the clients, it's not only it's more complex, but also when we think about providing products to meet their needs, we do not think about only providing one product, one insurance product, one fixed income product, one equity product. It doesn't work this way, okay? It has to be like a holistic approach because, I mean, it's so complex. I mean, the client has a lot of different needs, right? Insurance needs, fixed income, investment needs, equity or private markets investment. And some of the needs he or she is not even aware. And they need professionals like us to tell them, but in a holistic approach. And that also involves a lot of tax considerations, regulatory considerations as well. And then their stage of life, also a lot of changes in geopolitical landscape, demographic changes. That, I mean, it's such a huge complex issues that we have to provide a more holistic type of products to meet their needs. And that's something that we need to work on. I mean, it doesn't matter whether you are mainland insurer or, I mean, the international ones in Hong Kong.
Yeah, I mean, on the mainland bit, there was an interesting research done by BCG recently. They said that 60% of all wealth creation in Asia in the next 5 years will come out of China. Okay, so the China wealth market is around 30 trillion. The China offshore wealth market is about 2 trillion, growing 9%. Now, obviously, we want to capture our fair share in both those markets. But I think to CG's point, that solving for that onshore market is an opportunity for Hong Kong brands that have been around for hundreds of years, that have built those intangible qualities of trust and security and reliability, and to drive a step change in the level of protection and legacy planning onshore in China. And of course, offshore, international wealth is mobile. It's not constrained by borders. So we are competing against other IFCs, and we must not get complacent on that basis, and we must continue to focus on our strengths here.
Definitely. I think all of us heard it. I need to take at least one question, at least. But your comment about geopolitical, CG, brings up nicely into this question. This is in Chinese. Let me translate it. Geopolitical, geoeconomic risk, how would that impact succession planning, transfer planning, and as an ultra-high net worth client, is that something that we need to consider? As a solution provider, what would be your advice? So 2 quick answers. I mean, Andrew first. Geopolitical, how would it impact decisions on transfer and succession?
I think this is an inevitable problem that we are facing, and we have to think about it for our bosses. I think it's the solution for me, at least, is diversification.
Sure.
Diversification is the solution at the moment. I do not see anyone can provide a one-stop solution to this. So we do have some diversification ways. For example, we have some foreign institutions. You use foreign institutions as well as we use our local institutions.
Solutions.
Yeah, very quickly, diversification, agree. US dollar in times of uncertainty, flight to safety, flight to quality. And final thing, as I tell my kids, sort of fail to prepare, prepare to fail. So actually, find a good broker, find a good agent, find a good banker. We spend a lot of time talking about products in this industry, but in reality, the moment of truth is the advice that you receive from a professional.
Sure.
And that is the thing that we should be cultivating more.
Sorry, just one sentence. I'm looking ahead for the government to build up a much bigger gold storage in Hong Kong.
That's on the pipeline, I think.
So I agree with all those points. The one that I would add is fundamentals of long-term wealth management and wealth protection. Take a long-term view. Because of course there will be, there'll be shocks to the system at some point. It's hard to predict when they will be. But if you think over a 20, 30, 40-year horizon, some of those bumps along the road will be smoothed out. So that's important. I will add as well that you think about those 20, 30-year horizons, unforeseen events will happen. So find solutions that have the flexibility that you and your families may need. But worst thing, don't be tempted to hold cash, because in the long term, that's not going to help us.
Thank you. CG, your last comment?
I'm a half glass full guy. It's not only challenges, it's also opportunities. A lot of the cross-border demand are coming up to Hong Kong, and just utilize Hong Kong as the gateway to the international markets. And you can have access to higher yield products.
Sure.
Very simple.
Yeah, thank you. My last takeaway, the topic insurance solutions in wealth management. I'm sure insurance industry have a lot to play for Hong Kong as a wealth management center and an international financial center. So this is my last words, and thank you very much for the 4 distinguished panelists.